Lots of people will tell you that you should invest your money, your friends or your family or random people on the internet. And the thing is that there is a lot of information out there about theory, investment strategies, all the top level stuff. But what I found when I was starting my investment journey was that there was a real lack of practical nuts and bolts type information. I didn't know how to go about buying my first stock or share. So in this video, I want to show you step by step how I started investing. So the first thing to note is that what I'm talking about here is a super polished version of my experience. So side note, don't worry if you are busy on some kind of zigzag journey. That is super normal, and my experience definitely included a few false starts. But anyway, moving on. Set aside time to study the basics. Like I said, there's a lot of theory and investment strategy information out there. That's a good place to start because you need information before you can make informed decisions. So when I started taking my finances more seriously, I gave myself a deadline. I gave myself 6 months to recap all the investment stuff that I knew so that I knew what my plan was going to be. So that research included investment basics, like what does the terminology mean? What are the different options for the kind of everyday at home investor? And also the nitty gritty that I'm talking about today. How do you even start handing over your money to? Who do you give it to buy a piece of an investment fund? Decide how much you can invest each month. Right, so once you have all your information gathered and your ducks are in a row, the next really important phase is to take a look at your budget, figure out how much money you can actually afford to invest. Because what they always say is, investments can go up and down. You may not get the return that you're expecting. So any money you put into the stock market or any other kind of investment, you should really be comfortable losing. Number 3, research the right investment platform for you. So this is where it starts to get juicy in terms of the nuts and bolts, because as you probably surmised, if you want to buy a piece of Amazon, you don't email Jeff Bezos and say, right, Jeff, I've got $200 or £200 and I want to buy a piece of Amazon. No, what you do is you find an investment platform, which for lay people like you and I, this is a good comparison with a bank. So you usually download the app or go online. And then what you will find is that there are different account options. So in the UK, you could have a self-invested personal pension. In the US, that would be a 401k. You can have a stocks and shares ISA in the UK, and you could have a normal dealing account. So the difference between these accounts is usually the tax allowances. So your interest or earnings of your investments will be tax-free, so you won't have to pay tax on them if they're within the tax-efficient account. So similar to banks, the trading platforms all will have slightly different services, different costs, accessibility to different kinds of investments. And these are all the kind of things that you want to take into account when you choose a platform. So when I was choosing a platform, I didn't not overcomplicate things. I went with a recommendation from a friend based on the fact that the interface was really easy to use. They had lots of low cost options in terms of trading options, and they offered the type of investments that I was interested in getting involved with. Number 4, choose the right account within your platform. So like I said earlier, between the 401k or the self-invested personal pension versus stocks and shares ISA. Once you have your platform chosen, you decide on the account. And so that was my next step. Once I had set up the platform, I then chose the account for me. Number 5, transfer money into the account. So this again is like the juicy bits. Before you can make any trades or buy any shares, you first need to put money into your account. So if you plan to invest regularly, you can set up a standing order, which is super convenient. And that way you automate the transfer so that your trading account is always topped up with cash. And that leads us to the next point, choosing your investments. So once the cash was already in my dealing account, it was then time to get real about this whole investing thing and choose which investments I actually wanted to make. So there are a range of different options here. You can buy individual shares. So you could say, I want a share in Apple specifically. You can opt for a slice of a fund, which is a group of individual stocks that is managed by a fund manager. So because there's a human involved, it makes it a little bit more expensive to run. So you usually pay a bit more in terms of trading fees and things like that. And then you also have the option of index funds or tracker funds. So that would either be index or exchange traded funds. These tend to be the lowest risk, lowest return, also the cheapest. So all of those options are basically DIY. The onus is on you to do the research for the fees, the expected returns, how comfortable you are with the social environmental responsibility side of things, and the minimum cost for buying one. Then there is a whole other world, which is the robo investment. So these are the done for you investment options. And from what I've seen, most platforms these days have this option. Basically how it works is that they will ask you a set amount of questions around things like your risk profile, your appetite for risk, how long you plan to invest for, whether it's 5 years, 10 years, forever. And then based on your answer, it will suggest a package. Number 7, set up a regular investment. So you've got your account set up, it's got money in it, and you've chosen where and how you want to invest. The next stage is automating this part of the process. So you've already got your standing order going into the account. So every month your dealing account is being topped up with cash. The next stage is once you've chosen your investment. So let's say that you've gone for an exchange traded fund, an ETF. You can select and tell the platform that for that ETF you want to reinvest the same amount every month. That is what I did. And this way, my investments are totally hands-off. I don't need to do anything. The money leaves my bank account, goes into my dealing account, and a few days later, it reinvests into the funds that I have picked. Quick side note. So what I'm describing here is basically often considered a sort of middle class approach to investing. So it's quite low risk, but it's also quite low return. So this is not the route to take if you're a super ambitious, get rich quick kind of person. For me, this has been a really great gateway into investing because it's quite low risk. But now that I've got everything set up and my investments are kind of working away slowly in the background, what I've been doing is reading up and going to a few webinars about some different approaches to investing. And that will take me to point number 8. So at this stage, you can revisit your budget and figure out if you have A, enough cash, and B, if you want to use that extra cash to dabble a little bit more in some more exciting investments. So like I said, I have my boring investments, the ones that are automated, that are not going up and down all the time, that I check in on maybe quarterly. Then I have also started taking the extra cash when I have it at the end of the month and topping up my investment account. So when the amount in the account has grown sufficiently, I am now using that money to invest in slightly more interesting investments so that I can see what happens. And that is very exciting. Number 9, resist the urge to meddle. So I alluded to this, the boring investments go in, I don't touch them. The whole thing with the investment strategy that I am taking is leaving it there for a long time. So I'm going for compounding interest and spreading my investment. So I invest a fair amount regularly, and I'm not trying to time the market or do anything clever, because I'm at the point of the Dunning-Kruger effect where I know that there is so much that I do not know, and I'm not going to try and be smart about it. Okay, so there you have it. Those are the 9 steps that I took to actually start investing, and you are very welcome to use this as a roadmap. In fact, I hope you do, although being aware that you need to make your own decisions about certain things. And yeah, good luck. Have faith in the process. I know you can do it because I was able to. See you in the next video, and thank you so much for watching.